Time now for an in-depth look at the market news on this Friday, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
Well, the Dow overnight up almost 6.5%, 3 sessions in a row now of gains after these weeks of historic instability. In fact, these 3 days were the biggest 3-day jump since the 1930s. Did we hit the bottom here? What's the story on Wall Street and the Korean markets?
Right. If you look at the news flow yesterday, you had one of the worst unemployment data coming out from U.S. The total amount of the non-job requirement came out to be, total jobless claim came out to be 3.28 million, which was much higher than the market forecast of 1 million. So the U.S. unemployment ratio is expected to rise to sharply at least double of the current number, which is 3.5%, to at least 7% plus going forward. Even it might hit more than 10% unemployment ratios if we think about all the closures that's happening due to the coronavirus impact. Despite such a negative news, we are seeing a very sharp rise of the U.S. equity market. As you said, Dow was up 6.4%, S&P was up 6.2%, and NASDAQ was up 5.6%. And clearly, we are seeing quite a significant rise because despite all the concern about the economic weakness, all the beneficiary measures that U.S. government is putting on, as well as the Fed is putting on, is extremely high level of numbers. You're talking about 10% of GDP numbers as direct support. In addition to that, 20% of GDP as financing, which this is a record high level that you had never seen in the past of history. So clearly, this is the reason why the equity market is rising despite the expected slowdown or a depression that you will see in second quarter of this year. In terms of whether this market will continue to rise, will all depend on what happens to third quarter of this year. If the coronavirus is contained and that you see a very sharp recovery of economic growth rate in third quarter, then yes, the equity market can continue to go up. But for the time being, we think that there will be some volatilities, the residual volatility that might be coming through over the next couple of months or so, because we already know for sure that the economy will slow down significantly or actually shrink in second quarter.
Right. Well, in the meantime, we see the Korean currency a lot stronger today than it has been, closing in on 1,200 now. Is that going to continue?
Right. After the signing this currency swap, we have seen quite a appreciation of Korean won. And in the meantime, it did depreciate once again to the 1270 territories, but it came back down. Now, as you said, we're seeing close to 1200 level. We think that more normal, reasonable level of currency is that 1200 or even below that. So more likely scenario should be 1180 to 1230 range bound because of the current conditions of Korean economy. Even though we are concerned about domestic consumption to be very, very low number this year, we think that the export seems to be fairly reasonably strong despite all the coronavirus impact. The reason for that is because of the strong semiconductor business that's continuing. Yes, there is concern about slowdown in second quarter, but nevertheless, the change in the industry dynamics would allow the DRAM industry to expand continuously in the future, particularly in the second half of this year. Having said that, we think that one should not depreciate any further, nor appreciate any further. It should be in a range bound around 1200, plus minus 2% on the range in the future.
Got it. Well, talking about oil for a minute, it rose for a few days this week, then going back down to where it was. The U.S. suspending plans to buy crude for its strategic reserves. That was ultimately not included in the stimulus package. Where do you see oil going from here?
Right. It's very hard to say. I think that Saudi Arabia and Russia, if they think about their structure of economy, they must have come up with some kind of reduction in production. If you look at Saudi, you need to have oil price above $50 to have a positive budget surplus. And for Russia, if you look at the 70% of GDP is related to the oil. Now, if the oil price goes down by that much, then it really affects negatively on their economic numbers. So clearly, these two countries need to come to negotiation table and decide on the reduction of productions. Still, their egos are too high at this point in time. And as for the impacting the U.S. economy, we really think that the shale gas company going bust is not going to make a GDP growth rate to be much bigger negative than what it is now. We are estimating all the shale gas company goes bust, that impact is only 0.5% of GDP for U.S. So clearly, if there's a consolidation, it's not going to really make much of a differences. So I think that you really need to see Saudi Arabia and Russia coming into the negotiation table and deciding on cutting the production. We think that they cannot last for too long. So eventually they will come to agreement. If that happens, then oil price should recover well above $35.
All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for coming on, and we'll speak again next week.
Thank you very much.